Welcome back to MPTV. Our panel discussion tonight is apartments versus houses. Which is a better investment? A simple topic with a lot to discuss. From the REIV, Robert LaRocca. From Empower Wealth, Ben Kingsley. Gentlemen, streamline panel tonight. And that's because you're the experts. Start with you, Ben.
Sure.
Which is better? Houses or apartments? It's a
simple question.
Yes or no?
Not a simple answer.
Oh, all right, okay.
Look, I think the biggest mistake that people make when they actually look at a value, they mistake dwelling size for value. And so when, let's say you've got $400,000 to spend on an investment property, they go in and they look at a unit and they say, and they go out wide and they see, a 3-bedroom, 4-bedroom house on a big parcel of land and they think, well, we're getting more bang for our buck. But the argument is not that. The argument stems from the idea of the value comes in the land. It's the land that appreciates. So ultimately what you've got to do is study where the land growth is going to come from.
So ultimately a very small piece of land by the beach in a city worth more than a large block maybe out in the burbs.
Naturally true. I mean, if you look at New York, you look at Tokyo, you look at England and London, you look at those locations and you say to yourself, apartments in those areas can fetch tens of millions of dollars because they're right opposite the park or they're perfectly located to all the conveniences. It's no different to Melbourne, Sydney, Brisbane, Perth, those type of markets where you're looking at the actual land content and you're saying what's the value of that land, because that's the scarce item. The dwelling that sits on top of it is something that deteriorates in terms of it obviously depreciates over time.
And you're quite right, it really is the scarcity factor. You're not going to build more land, you're going to build more dwellings. That's why we see the apartments going up, because they're capitalising on the high land costs to accommodate the growth in the population. It's also worth, when you're looking at those figures that are produced, and we produce them as well about median prices, to understand that the headline figures about units versus houses, you need to look inside them. Because when we say units, we actually put in there townhouses, flats, apartments. So there's an incredible variety in the dwellings that are in there. And of course, what is a unit and apartment in the outer suburbs is very different to what is a unit and apartment in the inner city. And part of the defining factor is going to be land, but also the underlying land value. I mean, in Melbourne, we looked at Balwyn, for instance. The appreciation of houses in Balwyn has nearly doubled that from the units and apartments because, of course, land is very scarce in the inner city.
But obviously borrowing too so yield comes into it as well, and obviously some apartments yield is higher or a house, or it just depends as well. That's got to be factored in.
It does. I mean, when you're looking for an investment return, you're looking at capital growth and you're looking at yield. So depending on your personal circumstances and what strategy you might have around the type of investment returns you want, they're the types of things you're going to consider. So if you're looking at your target audience and you're looking at young, upwardly mobile urban professional people, they want to be close to the action. So they're more likely to rent a unit than what they are to rent a house out in the suburbs and maintain the garden.
So in what circumstances would a house be a better investment?
In most of the capital cities close to the CBD, because again the land is scarce.
Yep.
So really driven by that scarcity factor, that is what will drive the value, in land and across cities really.
What about when we get outside of, we head into regional areas? We're reading a lot about, booms in regional areas. Do the arguments hold up there as well, where land is probably in a lot more in abundance? It
goes back to my point before about what is a unit, an apartment. In different places, it's different things. No, not really, but you look in the regional centres, you're not going to see the large inner city type apartment blocks. So there's different questions there. The other question you've got to look at is, when you're looking at those values, is established versus new. And a lot of what we see in the unit apartment market is new dwellings, which are a completely different value proposition to established ones.
So talking about things like the glut of apartments and that around the Docklands area, which seems to ebb and flow. One year there's too many, the next year they're building more.
Look, and this is the second layer. Let's, once we've established value versus, size, and you get the understanding that it's land that's driving the capital growth, you then want to understand the next layer, which is what we call land to asset ratio from a technical term. And it basically means that if you've got, say, 300 or 400 apartments in one complex, and next door to that is an apartment block of 4 or 5, your land content is far greater. So you might have 1/6 of the land content as opposed to 1/100th of the land content. Now, if the land is the thing that appreciates, as an investor, you're looking to grab onto that smaller dwelling than what you are to look at, sort of buying in something that could be oversupplied very easily.
Are we factoring in the future, the fact that higher density living and these sorts of things are going to make apartments more common? Is that, as society adapts to living in apartments, will houses, even though they might have more land, be not as
the land value is still consistent, so the land to asset ratio is still going to be 60 or 70% of the overall value, and so that's, naturally all this urban development and urban renewal is still going to grow that land value. Like if you could buy a mansion in downtown Manhattan, imagine what it would be worth. A square metre of dirt in that is in the millions. So ultimately the same effect applies. So if you are looking at houses, you look at single fronted homes that have rental demand but are also well located. So areas like Middle Park, Port Melbourne, Albert Park, those type of areas in Melbourne, and then you look at areas like Paddington, Neutral Bay, Double Bay areas in Sydney, and then you're looking at sort of areas like Hamilton and Ascot in Brisbane. They're the type of areas that are going to be highly desirable for both the tenant and also the investor.
And I guess, Robert, it also continually comes back to what you can afford, what comfortably sits with you, what you buy.
I mean, what are your objectives when you're going into purchasing property? I mean, if it's to live in, the part of the purchase and what's driving it in terms of your lifestyle needs are probably going to be more important than the investment outcome, and certainly more important than the yield, because there won't be one. So you've got to start from that point of, what am I seeking to get out of this? Is it somewhere to live? Is it somewhere to invest? Then you budget, and then you start going through that search process. But you've got to have your objectives clearly defined.
So they're the other things that really make a difference when you're deciding.
When you start to, again, unfold the layers of an investment strategy and an asset selection strategy, you then start looking at the appeal of the actual asset itself. The combination of, say, an Art Deco compared to a 70s square flat. There is intrinsic value in a rare item. No different than, an Aston Martin car. As they get older and there's less and less of them available and they've got great floor plans and they're stable and they're reliable, the actual dwelling then does have an X factor for an outperform result. There's a science to this, and that's why we spend our days studying this, to try and get the investment grade asset, because a lot of people make a lot of mistakes. If they just simply say house versus land, they make very simple mistakes, which ultimately, if we're looking at this from an investment point of view, is going to determine whether they're going to have a great return or a poor return.
All right. Robert, Ben, thanks for joining us on MPTV. If you've got some questions for Ben, go to our website, mptv.com.au. He'll be online in our chat room for half an hour after the show.
This show is brought to you by the Real Estate Institute of Victoria and realestateview.com.au.